in the world of trading, there's three types of trend: an uptrend, downtrends, and sideways markets. We cannot predict the market. We don't know where the market will be over the next 6 months, 9 months, or even 5, 10 years from now. Two alternatives: when you see a downtrend, you can stay away, wait for the downtrend to get finished, and when a reversal happens, you start buying, or you can short. In the world of investing, there are a lot of things that you could do so that you can thrive. Please do notice that people always say that it's all about luck or it's all about trying to hit a jackpot. When you start trading, it's something that's methodical. It's something that takes a lot of time. It's something that takes a lot of dedication, so you become good at it. It doesn't mean that you need to be an expert for you to be able to trade. It doesn't mean also that you have to quit and give up your job for you to be able to trade, because I really believe this, that trading should be part of your lifestyle. Trading should be part of who you are. Meaning, if you are a business person, you get to trade while you are running that business. If you're an employee, you get to trade also while you are an employee, at the comforts of your home, at the free time that you have. When you start trading, it should be something that should complement you. It should be something that should add to your lifestyle, not the opposite, that you will revolve and change your entire life so that you can trade. Always remember that every time you trade, it's you taking control of that asset class and using it also to help you earn repeatedly. And in this video, I want to talk about 3 trading techniques that could help you win repeatedly in trading over the long term. As what I've mentioned, it's not about hitting jackpots, but it's all about trading well, doing it repeatedly over a stretch period of time. Now, please pay attention. I have something very exciting to share to you. On the 9th of February 2023, FBS, an international online broker, celebrated its 14th birthday. On this occasion, FBS launched a special online promo called FBS Ultimate Trading Birthday. Any trader can take part in it and win amazing prizes. Participants will have a chance to win a prize from a variety of useful gadgets: laptops, tablets, smartphones, wireless headphones, as well as the main prize, a Mercedes-Benz CLA class. Moreover, FBS offer guaranteed gifts to every trader who joined the promo and traded 5 lots. In this promo, participants collect tickets by trading lots. You receive 1 ticket for 1 standard lot traded after you have joined the promotion. For full info on the promo and how lots are calculated, refer to the terms and conditions. After the end of the promo, all tickets are entered into the raffle, where prizes are raffled off randomly. So how to enter the promotion and get a chance to win those prizes? There are 5 steps. Number 1, register with FBS in any of the products. Number 2, verify your email if you haven't already. Number 3, find the FBS Ultimate Trading Birthday in the promotions list. Number 4, click Join Promo. Number 5, start trading and collect your tickets. To join the promo and find more information about the FBS Ultimate Trading Birthday, just click the link on top of the description box below this video. Win prizes and celebrate the community. So tip number 1 in our trading techniques is to follow the trend. Please do remember this, that in the world of trading, there's 3 types of trend: an uptrend, downtrends, and sideways markets. We cannot predict the market. We don't know where the market will be over the next 6 months, 9 months, or even 5, 10 years from now. We don't know. No one has a crystal ball on where it will be. However, we can identify what the trend is. By identifying what the trend is, it would help us know what we're supposed to do. By identifying what the trend is, it will help us map out what our battle plan is. And also, when you follow the trend and you create strategies on top of it, it will allow you not to go counter against it. Think about it this way: you're riding the escalator going up, but you're going the opposite direction. What happens when you do that? It becomes harder. Every time you go against a trend, it will be harder for you to maximize what you have, or it will also prolong or make your losses even bigger. The goal of following the trend is for you to realize that if the trend is in this direction, this should be your strategy, so that you're not guessing, so that you're not relying on luck, so that you have a scenario on how you're supposed to pull out the trade. Second, highly connected to tip number 1, once you've started to identify what trend it is and then you see that it's a downtrend, the common narrative as a trader is to avoid downtrends. Because here's the thing, you don't know how long a market, a stock, or an asset will go. What's low today could get even lower. So the narrative and the name of the game is, if you see it in a downtrend, you avoid. You don't have to guess where the exact bottom is. You just have to come in when it's starting to reverse. Better come in relatively higher than try to come in because you think it's already cheap and then you see it go down and down and down and down. When a market, a stock, or an asset is in a downtrend, bears are in control. There's also fear. There's also a lot of uncertainty, and there's also a lot of doubt. And when that's happening, not a lot of people want to invest. There's sellers dominating the buyers, and more sellers bring the prices down. When you see a downtrend, avoid it. Don't do anything about it. Wait until you see a reversal. Another alternative is when you see a downtrend, instead of avoiding it, you can also short it and you can profit while it's going down. Especially if you see, say, bad news, it could bring the price down even more. So, two alternatives: when you see a downtrend, you can stay away, wait for the downtrend to get finished, and when a reversal happens, you start buying, or you can short. Tip number 3 is ride uptrends. And this is under the context that you are going long on a certain position, or you believe the certain position would continue to go higher. What I've noticed in investing, people sell too quick. When they have a winning position, their emotions get ahead of them. They have a winning position, but all they can see is the profits that they get, and then they close the position early. They get out of the position only to see it go up even further. You know that feeling of you wanting to get it already because that gain might get lost or it might go lower and you may not be able to maximize it to its fullest extent. However, when there's an uptrend, do remember this, it's the opposite of a downtrend, where in a downtrend, sellers are in control, people don't want to buy higher. But in an uptrend, there's optimism, there's excitement, probably good earnings, probably a better macroeconomic environment, and you have people willing to buy higher. And when you have investors, people who are willing to buy higher, the narrative is more buyers bring the prices up. Even if the stock, the asset is already up, it could still continue to go higher. The reason why we follow the trend is because when we realize the trend is our friend, that's when we maximize it to its fullest extent. I hope you guys learned a lot from this video. The 3 tips are: identify the trend, and once you've identified it, if it's a downtrend, avoid, or you can short, or if it's in an uptrend, don't sell too early. Maximize it, ride it to the fullest extent. I hope you guys got a lot from this. Marvin Gurmo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.